Hey, everybody, welcome to another episode of Money and Stuff. I'm your host, Sam Rodriguez, certified financial planner. I also, as always, have with me Conor Shepard. Conor Shepard, Lord of Uptown Dallas. I don't know. What do
The
you want
Lord of Uptown Dallas. I'll take that. I'll put that on my resume. Can we put that
you
on the
put that on your
business?
business card? Anyway, man. So I said, hey, I just want you to surprise me. So, like, what are we talking about today, man?
I went to In and Out over the weekend and was looking at their menu, and they've increased their prices a couple times over the last several months, but looking at their double combo, they've always been known as having, more affordable fast food relative to a lot of other fast food places. And their double combo for the first time ever is over $10. And seeing that, hearing what clients have been saying and just in general what people are hearing when it comes to prices seem to be going up, right? Things just seem more expensive, but we keep seeing in the news that inflation has been going down closer to that 2% line. Where's the disconnect? What's going on?
I think the fast food example you just gave is really good. Imagine being a family of three or four. I know for us, my wife and my son, myself, it used to be, hey, let's just go get something quick and cheap. Quick, that's relative, but cheap doesn't feel like it's there anymore. I think if it's the three of us, minimum, unless one of them orders something off a kid's menu and it's super cheap, it is like 30, 40, sometimes $50 just for fast food for three people, which is, it used to be, I feel like it used to be, we could probably get out of there somewhere between 15, maybe $20 on the high end.
Yeah,
Yeah. So what do you want to talk about? You want
I,
to talk about In and Out? What do you want to talk about?
I think it'd be good for us to just talk about, what's really happening out there, what's playing into it, kind of the misunderstandings, or just clear up, what's going on that people are experiencing, and what are the factors playing into it that, have so many people seemingly just feeling like everything is more expensive.
Yeah. So did you prep stats? Like, do you have stats of like where inflation is now compared to like what's happened over the last few years? Or are you just coming on here making stuff up, making wild accusations, accusing In and Out of things, accusing In and Out of corporate greed and wanting to mar their name?
No, I'm trying to find data.
So let's say what is the theme here that we're being told inflation is going down, but everybody's still feeling the pinch, it feels like.
Yeah.
I'll tell you what I see. Because I think the latest CPI data came out and inflation is still hovering somewhere around 2.5, maybe slightly less than that, right? And I think it's important for people to understand that the Fed target for inflation is 2%. That's their target. And when you ask, and you really dig into it, from what I've seen, seems like they just needed to land on a number, right? And that's the number they liked. So first of all, that number's always felt kind of arbitrary to me, but 2% is what they're trying to get to. From what I hear, there's a misconception of what inflation coming down means, right? And I think it's important that people know that inflation, that's not really what I want to say. What I really want to say is like prices don't usually come down, they just slow down. And so when we're talking about inflation data, what we're really talking about is how fast prices are increasing. But historically, they're almost always increasing. So I don't know that we'll get to a point where we see prices actually come down. What happens to make sort of your living style come back to normal is inflation goes up and wages come up to meet them. And that's probably where the biggest disconnect is right now, is wages really, from what I've seen, still have not come up to meet what inflation has gone up by over the last several years.
Yeah, I think that's, you hit on the two main factors, right? Number one of the big misconceptions that I hear from a lot of people is this, this expectation that prices will fluctuate sort of along with inflation, right? So if inflation is going up more quickly, prices go up more quickly. But then if inflation starts dropping, prices start to ease up and fall back down. And the reality is, like you said, inflation is just a measure of how quickly prices are increasing, right? It's a lot easier for businesses to raise their prices. It's a lot harder for them to drop those prices and essentially be willing to take a lower cut of the pie, so to speak.
Yeah, that's the issue that I see anyway, is that the purpose of business is to make profit, right? So, you know, however you feel about the tariffs, they did cause prices to go up, right? But how much faster could it have gone down if the tariffs were not in place? Just because inflation came down does not mean tariffs did not have an effect. So let's say that we say, okay, well, now that the tariffs are not there, or if the tariffs go away, doesn't that mean that doesn't that mean that prices will come down? Because now the suppliers, or the people who we are buying things from, their costs are now lower. And that's just not how we see business work, right? If I'm selling you something for $100 and it costs me $80 to produce that, and I make that $20 profit, if suddenly it only costs me $60 to produce it, as a business, I go, great, my profit went up. Because if you're still paying for it, why do I drop it? And that's something that we saw during this period of time, is all of the inflation that we saw. There were many different components to it. But one of the components was some companies seeing how much they could raise prices or reduce what they gave you, and you would still pay it. And so there was this sort of break even. If I normally charge you $100 and I raise it to 120, yes, some people are going to fall off. But is it enough that I'm not making more profit by the people who stay and pay the extra $20? And even heard some of the quarterly calls where CEOs were specifically talking about that. And, I don't know that we want to call corporations or businesses evil. I mean, businesses are in the business to make profit, but that's part of it. So watching prices drop, I think we all see prices drop on some things, but I mean, prices just typically don't come down. They just slow down.
Yeah. What you're talking about, it just goes back to that supply demand factor, right? If people are still willing to buy, companies are going to be willing to raise their prices incrementally and see, are we still getting that same level of demand, right? As demand goes up, prices are going to go up because people are still willing to buy and companies are able to make more money. I mean, we did a previous episode a while back about how Disney World for the longest time was kind of that middle class dream, right? It was affordable enough that, a could go, family of four could go spend a week at Disney World and it wouldn't just break the bank. It wouldn't cost, $5,000, $10,000. But Disney World came out raising the cost on most of everything from what we saw, from parking to hotels to tickets, everything. And logic was, we can raise these prices, and yes, it may price out this segment of the population who will no longer come, but the part of the population that is still going to attend, paying those increased prices will make up lost revenue and still increase revenue.
Yeah,
Function of how businesses are going to progress.
I really think that's where we can talk about what I know you and I have had discussions on, and I know we've been talking with clients about lately, is what we're calling a K-shaped economy, right? That's where, if you think of the way the letter K is, you've got one line that goes up and to the right and another line that goes down and to the right. And you hear a lot of mixed things in the news right now. You hear people saying, "Oh, the economy's terrible," and then you hear people saying, "But the stock market is up and the economy's doing well because of XYZ." What I'm seeing is that your upper wage earners are doing well. And the statistics are showing that they're doing well for a few different reasons. One is that they're making a pretty good amount of money. And so they still have some cushion to spend, right? Two is your higher earners typically have assets, investments, properties. And in the economy we're in right now, those have been going up in value. But your lower wage earners, they typically don't have those assets. And for people who were already sort of living where their expenses matched what their income was, that's a struggle, right? That's a struggle for those people. And those people are really feeling the impact of how much inflation went up. And even if it slowed down, they never caught up.
Yeah, I mean, it almost seems like if you cut, the economy into those two segments and you looked at them in a vacuum, that lower slide of the K, I mean, it almost seems like they've been in a recession for a number of years, right? Living paycheck to paycheck. And again, that's the type of thing that businesses, companies are going to naturally try to adjust and I guess cater, for lack of a better term, that part of the economy that is still spending the way they normally do, that are comfortable spending on the same stuff they always have, even if the price on things continues to go up.
So if you look at it from a business owner's perspective, and you look at these two segments of the population, and you go, well, this segment that's going down into the right, they could already be spending all of their income. So if I market to them, they may not be able to buy my product anyway. So if I market to people who still have some disposable income and are willing to pay a higher price, I don't have to think about keeping that price somewhere in the middle to where it appealed to more people. I can keep it up, right? That's, I could see how that could be happening right now. The other thing too, the Bureau of Labor Statistics, recently came out with the year-over-year wage inflation or wage growth. And I think it was like 3.4 something, which sounds good if you have inflation at 2.4. You go, oh, great, we're catching up. But when you dig deeper into those numbers and you look at it on the wage growth of high earners versus the wage growth of lower earners, the high earners had a year over year wage growth of somewhere around 4%. So, yes, they are outpacing inflation. But the lower wage earners had wage growth of just barely over 1%. And so they're actually still falling behind on inflation, even though inflation has come down.
The wage growth factor is the other big one, right? Because if people feel like things are more expensive, if your wage is growing at or above the rate that we're seeing prices increase, you're not really going to feel like things are more expensive, or at the very least, it's not going to be nearly as much of a punch in the gut, so to speak. But if you've already seen your wage growth, slow and kind of be stagnant for an extended period of time, you're not only going to feel like things are more expensive, you're going to feel like, man, I'm just getting by. I'm barely able to afford the things that normally I was able to pay for pretty easily. It wasn't easy, but I was able to pay for things and still feel relatively comfortable. But that's the other aspect of it where, based on what we're seeing, there's a disconnect, right, between people who feel like, man, I don't see why people are complaining, it doesn't feel like things are so bad, versus I'm living paycheck to paycheck, I haven't been able to build any meaningful savings for since COVID.
Yeah, you know, so far, we've kind of really been talking about discretionary spending, having discretionary spending versus lack of discretionary spending. And we've been talking about those things that you spend money on. And, in this K-shaped economy, the up and to the right portion of the population being able to spend money on discretionary things. We haven't even talked about the things that are not discretionary and their impact on the lower wage households, right? I know we've talked about AI in the past and the possibility of it, how we believe we're seeing it taking some entry level type jobs away, which really, if you start taking entry level jobs away, you also start taking away earnings power from people who are taking entry level jobs, right? But the other aspect to AI, you think about energy cost and us seeing energy costs going up because in these areas where they put these data centers and the energy that they use up causing energy prices to go up is another factor, right? So when you think about things like energy prices, food prices, gas prices, things that a household, no matter how much they make, are probably going to have to spend money on. The situation is, it's not a choice. It's not, their situation is not, well, we'll cut back spending and we won't go to the movies as much, or we won't go out to eat as much, or we won't. I was thinking about this yesterday. I was like, I don't have a lot of discretionary spending. And like people who watch this podcast or watch our videos probably go, does Sam only have like 5 shirts? Yes. I have 5 shirts, like 3 sweaters, 3 sweatshirts, and like 3 pairs of pants, right? Like, not like, and like you could probably take a picture of me from 10 years ago and it would be the same. There's a high likelihood I'd be wearing the same clothes I'm wearing on like right now, right? So it's always tough for me to find what discretionary spending is. And I got to say it's not because I'm cheap. I like making my choices very, very simple. And I'm also so scared of following any sort of fashion, right? Because in my mind, I think if I buy that shirt or that style of pant today, will it still be in style 3 years from now and 5 years from now? And so if you see the clothes that I wear, it could be 1965, it could be today, and it's gonna be something that you shouldn't look out of place. It should just be, it'll look like anything any square dude would wear at that point in time. So that's why I have trouble coming up with what discretionary expenses are.
If you got against your own point.
It was because last night I was actually laying awake thinking about this because my wife went, like, she's part of this nonprofit, and there was this like pitch contest where a dozen or so nonprofits got up to pitch to win this grant from this organization. And so there's a lot of people there that I've kind of met once or twice. And I showed up and I was like, there's a lot of people that the last time I saw them, I wore this exact same thing, you know? And then it got me thinking, I was like, well, it's an extremely high likelihood that anybody who sees me not very often is going to see me in the same thing. And even if I'm not wearing the same thing, it's probably the same thing, just a different color. So it was already on my mind.
Well, I think it's a good point though, right? Because again, it goes back to if companies are looking at their consumer demographic and they're looking at that lower slide of the K and they think, hey, they're already spending on just the essentials. So any increase in price on something outside the realm of what is essential really isn't relevant to them, or at least their perception
Yeah,
is
they're
there's no relevance.
yeah, right. Like we've probably already lost the customers we're going to lose. They're probably not buying our product anyway right now. Right. I mean, I'm always shocked at prices. We were at another event the other day and it was another nonprofit event and they were selling hats, like baseball style, big caps, whatever you want to call them. And the guy was doing the whole like, it's not $100, it's not $75, it's not even $50. And he's like, for the low price of $25. And I said out loud, I didn't realize how loud I said it. I was like, $25 for a hat? Right? Like my wife, I got the elbow. And then I was like, what? Is that a good price for a hat? Like, I have no idea.
I haven't bought a hat in 20 years.
I've never bought a, actually, no, that's not true. I bought a hat one time at an HEB on my way checking out because we were going to float the river. For those of you not from Central Texas, getting in an inner tube and getting on the river with your friends is an activity that we do in the summer, or you do when you're younger anyway. And I thought, you know what, I don't want to get sunburn on my face. So I bought a hat at the checkout counter for like, I don't know, man, super cheap.
Not
That's the only time I bought a
$25.
hat. Any hats? No. Right? If it were $25, I'd have probably said, I'll deal with the sunburn. Right. But any hats that I have been gifts from other people or out of swag bags or something like that, right? I've never. So I don't know if that's a good price or not.
I feel
Why are
like
we
it
talking about
probably.
this? What are we supposed to be talking about?
How do we find the road? We're so deep in the forest right now.
A lot of people are hurting right now. And I bet it is, if they're watching TV or listening to the radio, whatever, watching YouTube and hearing inflation is coming down, it would tick me off if I were them. Like inflation's going down. Why am I still falling behind every month? Why can't I pay my bills? You know,
Well,
I don't know. What else do we want to talk about with this? You got any other points to make?
I mean, those are really the two big things. I think that's why I wanted us to talk about it is just kind of bridging the gap between that disconnect that we seem to be hearing about a lot. That one side who's,
Mhm.
yeah, I mean, things might be more expensive, but I'm doing fine. I'm still able to save. I'm still able to do the things I want. And then the side that's feeling like nobody's acknowledging that we've been struggling, not just struggling now, but we've been struggling, right? And these these are really the two main factors at play here.
I will say, like, it is felt across the board. I mean, maybe not in your, for people who, you know, we've got, we're at a time where you've got people who could spend $1 million a day that never come close to running out of money. So maybe for those people,
Yeah.
right. But I can tell you that it is affecting all things, right? I mean, I know I mentioned a couple of nonprofit functions that we've been to. Some of the things that we are involved with and that we do help are really struggling. And it's been like over the last 4 years, every year seeing less and less donations come in and really having to ask, almost beg people to please give and find other people. I think for a lot of nonprofits, they had champions that were always willing to give money that they could rely on. And now these nonprofits that I've seen are having to find other ways to bring money in, really almost beg people to still give if they had given in the past. Which, when I look at that, I think, well, that tells me that people who have money to give, they're making decisions about what they do with their money. And this is one of the areas that if they cut out, isn't really going to affect their life very much.
Yeah, and I think that's, if there's any takeaway from today, I guess it's just hopefully people can at least be a little more aware that these things are happening, right? Regardless of where you fall on that spectrum. I mean, these are the things that we're seeing every day and that we're hearing about every day. And it's not sustainable, right? It's something that there's got to be some kind of point where things pivot. And
Let me ask you, is it not sustainable or do you just think it's not sustainable? Our compliance wants to know. And if it's not sustainable, we need to understand what your data is that is backing that up.
I feel like it's not sustainable. And at some point, I feel like there has to be, a break point, a pivot point where something has to change, or that divide on that K-shaped economy that we're hearing about, that divide is only going to get wider and wider. And the wider it gets, the harder it's going to be, I assume, to eventually bridge things back together and find some kind of equilibrium, middle ground in how the economy functions.
I think the reason it could be difficult to reach a pivot point and something actually happen about it is because it could be difficult to go through the transition period, right? If you are someone who's heavily invested in the stock market, part of that transition period could be that public companies are not as profitable. for a time period. Now, I don't want to say they won't be as profitable into perpetuity because businesses tend to always find a way to get back to being more and more profitable. But I feel like there would have to be some sort of reset where they're not as profitable for a time period until people caught up, right? But company's not as profitable. Why is their stock price where it is then? And if we can't justify that stock price, then prices come down. And so we've got this, situation where you're going to have people who own assets that, even if they agree with what you're saying, they may not want to go through that time period.
What do you think is, if we were looking, let's say 5 years out, what do you think the likeliest outcome is? Or what do you see as the potential scenarios if this just continues the way it is?
So I think if things get difficult enough for enough people and they set aside other differences that they have, right? Whether it be, whatever it is, things that typically people vote on, issues that people typically vote on. If you can get enough people that are frustrated and hurting, that they quit thinking about all the other things that they have differences on and they focus on this one thing, they will start to vote people in who are giving a message of wrangling in corporations' influence on government, sort of the what I would call the corporation friendly policies we have in place right now, right? Some of the regulations that have been loosened up, not just over the last few years, but over the last 40 years, in order to allow companies to become as profitable as they have, which I'm not saying the country hasn't benefited economically, but some of those protections as they went away hurt other people, right? So I could see that being an issue, or a way that this begins to change. And that is the probably most civil way, right? We don't want what we've seen in history where people revolt and the upper class ends up with their heads on spikes. Hopefully that doesn't happen, right? The other thing that could happen, though, that sometimes causes a reset is a recession. And recessions are not easy, right? For the majority of people, recessions are not easy, but it does kind of give an excuse for a reset. So if companies are suddenly not as profitable because people don't have jobs, they have to start adjusting to say, well, what is our plan going to be when the economy begins to recover? And, if we're in a true recession, then even those people who are the up and to the right, they may be hurting just as much as everybody else at that time. And so just relying on them to continue to purchase from us, that may go away. And so sort of a big economic corporate reset may need to happen anyway. I think about the people who say, well, the last few sort of recessions we've had, the quick COVID recession, the housing recession, the government came in and just spread money everywhere. I personally don't think that that's a good way to help everyone, because when you think about it, even if you give the people who need it the most all of that money, who do they end up giving that money to? They end up giving the money to the people who are not even the people who are the up and to the right. It's the people who are the bosses of the people to the up and the right,
Yeah.
right? Because if you give people money, you're giving them money so that way they can still buy things, still, purchase things, still spend money, but they're spending money on things that they're buying from these corporations anyway. So essentially, you're just giving people money so they can give it to the corporations. So I don't think that's a fantastic plan. Has it kept us out of some recessions? Are things getting worse over our last two recessions? Sure, but we still don't know the ramifications of it. We know the debt that we're in, and as a country, I don't know that we can continue to take that amount of debt on. I think if we hit a recession, depending how deep that recession is, I don't know that that would be a great answer to that. But I do think, I don't want to call it a political reckoning, but I think we could hit a point where people start to believe that voting in corporations' interest is not in their best interest anymore.
I think that unwinding of the corporate and political branches is really going to have to be a linchpin of there being any long-term change and long-term resolution. Because your example with like 2008, I mean, you look at the bailouts that happened and the 20-30 million dollar bonuses that executives received as the company went bankrupt and liquidated their assets. It's putting a band-aid on a bullet wound, and there's it just seems
Yeah,
it
there's
seems
a
likelier that there has to be, a more significant change.
sure. So I don't want to come across as, hey, we thought that bailout from 2008 was bad. I think the ramifications if we hadn't done the bailout would have been worse. I mean, there's some pretty good documentaries out there about what we were on the brink of. But when you're trying to act quick, you're not always thinking about all the details. And you're not always thinking about the guardrails you should put in place against things like, and we saw a similar thing in 2020 where, you know, when they gave money out to businesses, because no one knew what was going to happen because everything was locked down. So as a business, you could say, I'm trying to remember what it was. I think it was like you would just have to show what how many employees you had and how much you paid your employees, and then they would give you money to keep your employees employed. And this was all done in anticipation of you needing to fire your employees. But once they gave you the money, there was no follow through on, were you ever in danger of having to lay your employees off?
Yeah.
And so for companies who didn't have to lay their employees off because they were still doing okay, they essentially, like, they got to keep that money, right? And I'm sure there's other instances where we can talk about what the programs were where they gave money out, but there's kind of no follow through on checking to see if that was actually needed.
Yeah.
We've got to be better stewards, and better stewards doesn't mean don't help people. It just means you can't just give money out, for nothing or without thinking about what the best use of it is, or how do we maximize it, or how does it have the biggest impact. We just got to do better.
Yeah, I mean, I think it just comes down to the accountability, right? Because a lot of times that initial solution helps to minimize or address the problem at the outset, but without some level of accountability or implementation of enforcement, it just seems like it opens the door much more to people people being able to take advantage of that.
Yeah, you've got to plan things out, right? You can't just say, here's the solution. You're not going to say, man, it's negative 30 outside and we have no heat in the house, so let's pour gasoline right here in the middle of the living room and light it. Yes, you're going to get warm, but what happens after that, right? Like, so you're solving a problem and creating a much bigger problem. And we have to be a little more thoughtful in how we solve problems.
Yeah,
We're supposed to be talking about inflation.
we went off the
Yeah.
rails today.
All right, let's wrap it up. You got any last points about inflation, Connor?
Nope. I mean, we covered everything I was wanting to talk about. I have a better understanding of why In and Out is $10 now. Still worth it.
Yeah. I mean, so I guess I should, if you're still listening here,
Why?
but I'll tell you this. So I had a really, really good friend of mine. I don't know how to describe his business, but he had a meat business prior to COVID. Right. And what he would do, he was getting meat, chicken, beef, all, whatever, from these sources that were, yeah, I don't know if organic, grass fed, whatever. He was really, really good. Right. And we would buy like 6 months of meat from him at a time, keep it in a deep freeze. And it was fantastic meat. And he ended up selling his business because he didn't want to raise prices. But his prices that he was paying were consistently going up. And I remember having a conversation with him, and this was pre-COVID, and he was talking about what was happening in the meat industry, in particular in the beef industry. And he was talking about how prices for beef was just going to continue to go up because of what was happening. And I don't remember all of it, but I think it was a lot of consolidation and, you know, basically a lot of big players buying up small players, reducing competition, things like that. So some of these things that are happening now, or some of the prices increases that we're seeing, they're not all due to the last few years. Some of them were already in place. Some of the things pre-COVID were already getting ready to pop off and be a problem. So there's a lot that goes into it, and I think that is one thing, the consolidation and of the hold that different corporations have on us, right? So if you've only got a handful of people who supply your meat, very easy for those people to collude and control prices.
Yeah.
That's one of the things I do worry about, even when we see these entertainment groups consolidating. What is the most recent one? Netflix was going to buy Paramount, but somebody else bought them instead, whatever. That's all scary, right? That's all things that we consume. And so these streaming services, even that used to cost us less than $10, it's like they're all going up, right? Like my internet keeps going up. Like everything keeps going up. Anyway, I don't know what my point was, man. We need to end this. It's the worst episode ever, Connor. All right. If you're still listening, thank you so much. Please, if you're not a subscriber, please hit like, please hit subscribe. Helps people find the channel. It also lets you know when we're going to have new episodes come out. Hey, if you have anything to say about this, let us know. If you have a what about and think we're wrong about something or want us to go deeper on something or want us to talk about something else, let us know. Thanks, guys.